Okay, let's do a little bit of economic vocabulary lexicon lesson stuff today. You all are dealing with some sort of inflation, right? In a worst case scenario or a bad case scenario, it goes to hyperinflation. During bad times, like in Japan, you have deflation. And of course, Jimmy Carter gave America stagflation back in the late 70s. With the U.S. economy pointing to a slowdown, and we heard from Bernanke saying that things are slower than expected, our next guess is that Asia will see mild, here's a new word, slowflation. A more benign version of stagflation. Johanna Chua, head of Asia Economics Market Analysis at Citigroup Global Markets Asia, joins the team on Squawk today. Morning, Johanna.
Hi, good morning.
Okay, here we go, making up words again. What exactly is slowflation?
Well, first of all, I have to say we're only saying very mild version of slowflation, meaning that we're sort of Asia is poised for some slowdown in growth, but still fairly sticky inflation. That's where we are in the cycle. So we've moved from earlier this year, the big fear was overheating, strong growth, high inflation, and now we're kind of moving to a different point of the cycle, where we're sort of in this slowflation mode. And I think the inflation part is still very important to emphasize, because I worry that people are focused a little bit about the growth slowdown risk, and this has become a kind of a convenient excuse for some central banks maybe to wait and see and pause. But I do think if you look at the round of data that we've seen on inflation, even though headline has come off, core inflation is still quite sticky. So that tells you something, that we still have the inflation part of the argument.
But this comes back to the issue, though. You know, we historically, and we were all taught in school that you strip out volatile components, because fuel can go up and down depending on OPEC whims or, seasonality or, oil spills, that sort of thing. But it's so baked into the cake now that it's really hard to strip out. So when you bring it down to core and say, hey, core is still looking very tame, it's almost like an excuse at this point, because nobody experiences core inflation. You and I know that. See, we don't, inflation is worse than CPI in just about every country, actual experienced inflation, correct?
No, but in reality, actually, headline inflation, because food prices have come off. So headline inflation, the headline numbers.
They have? Where are you shopping?
No, I mean, you look at the data. Yesterday, the UNFAO food price index just came out. Again, we had another month. Some carts, like meat and dairy, is still rising, but some of the components, like the cereals component, have actually had a monthly deflation. So overall, headline has come off a little bit. I mean, Hong Kong is obviously, the headline year on year is obviously still very high. And I think headline, maybe living in Hong Kong, it's a little bit different. But in other countries, at least the food component has come off from the very volatile weather-driven anomalies we saw earlier this year.
I'm going shopping with you
but
soon.
But core definitely is still rising. I mean, just give you an example. Yesterday, last week and yesterday, we had lower than expected headline inflation out of Philippines. We had lower than expected headline inflation out of Indonesia. A little bit lower in Korea. So it's come off. But the core, I have to stress, is still it's still picking up. It's still sticky. But I think with this growth backdrop of uncertainty about what's happening in the U.S., this week there's going to be two important central bank policy meetings, Korea and Indonesia, and I think this is going to give a good reason for a lot of central banks to
let's see how bad the inflation in Singapore is with the team there.
I think it's quite high, isn't it? We pay up for everything here. Joanna, when it comes to this global slowdown, a lot of people are still looking to China and are wondering whether China can help out. Is it going into a hard landing, or is it still fairly protected? Just reading an interesting report that's come out from Westpac. They do this every week, and they're saying the signal is loud and clear that the largest single component of fixed income, or fixed investment rather, is real estate construction. Despite all the slowdowns that we've seen in infrastructure, this is still fueling the Chinese economy. Do you agree with that?
No, I think that is a very major driver of growth in China. So I do believe in that. And a lot of the stories that talk about the China hard landing risk is always centered around the concern about the sustainability of the ongoing property investment story. But again, almost like clockwork, every year we have this discussion about China hard landing risk. And I just think that a lot of it is a bit exaggerated, that there's enough flexibility in the Chinese economy, at least on the policy front. We don't envision an imminent hard landing risk. And right now, China is going through sort of a growth slowdown, but still pretty much in line with the slowdown that we're expecting. Not anything very dramatic. So I don't want to over-exaggerate the fears about a much sharper correction in the property, therefore leading to a much harder landing in China. But I agree. I think property investment, if you want to sort of tell a story about China hard landing risk, the story is almost always interlinked with the story about the property sector.
Indeed. Joanna, let's pick up this conversation in just a minute.